Less than 12 months ago, the world was coming to an end, at least in a financial sense and an economic sense. Today, we see everything pumping. Markets that have not seen all-time highs in decades are about to hit all-time high. Fresh prices that they have not seen in decades. Real estate markets are up. Of course, Bitcoin is up. Despite many warnings of corrections, it is still so surprising to see these markets continue to hit fresh higher prices. So this everything bubble that we've been covering here on the channel looks like it is going to take off. But of course, we need to be prepared for any sort of corrections. I do want to take our attention to the biggest bull trap in history that we're going through. Of course, the real estate cycle. This is the winner's curse phase of the market. The best fun time to be making a lot of money, but the most scariest time if you get in too late. What happens after the winner's curse is the worst timing that you could possibly be in the markets. So although there's a lot of money to be made in these markets, especially in these times where money is easy and markets are going up, we need to have our wits about us and start to take some profits. I'm not talking about today, but we do need to prepare. Just like we prepare as we watch the videos, hitting that like and subscribe. I'm doing a pretty good job with the dad jokes at the beginning here. And of course, you're at your home of macro cycle analysis. Let's dive in to the macro cycle analysis today. As we dive into the macro cycle analysis, links in the top of the video description for our free crypto and economic report coming out in 24 hours. Link is right there. And the 7-day free trial for the TIA Gann swing indicator, which I'll use a lot in today's video. Over the last several weeks, we've noticed a huge market sentiment shift. If you remember back 12 months, it was looking like we were at the beginning of a complacency bounce and the markets were about to collapse. We had moves up into February and the markets from that point started to move down into the March crash. That was right back here. It looks like absolutely nothing compared to where the price is currently at. So I just bring our attention to that because of how, I guess it seems quickly, the market sentiment can shift. Right now, the main thing that I'm hearing, and probably you as well, is that are we going to see new all-time highs? Are we about to explode to $60,000? Can these markets ever pull back with the amount of Bitcoin that the ETFs are buying? How is this possible that the market just keeps going up? Bitcoin, in this case, continues to go up without any sort of pullback. But if you remember back 12 months ago, the same thing was said, but in reverse. How could the markets ever go up with, you name it, any sort of economic data that was supposed to collapse the markets? There was talks of the US debt ceiling crisis. We had the banking crisis. We had all sorts of crises happening at the bottoms. Yet from that point, the market just could not push any lower. And of course, we have pumped from that point. Now, in the macro sense, I suspect that's going to continue on throughout this period of the market where we see that winner's curse phase of the markets just pushing higher and higher. Of course, we will get a rollover, but we're still looking for another couple of years from this point. The main thing to note from this is when we start to hear that sound of how can the markets ever go down, just be cautious. Doesn't mean they can't keep pumping from that point, but it's just time to be cautious and not get sucked in to the rallies to the upside. Now, a way to prevent that, at least the way I like to trade, is using a swing indicator that you can identify where some of these low points and high points in the market come out. And that's why we continue to follow the chart over the noise that we hear in the market, that the markets have to keep going up because of some sort of fundamental reason. Now, these reasons do play into the market. We don't disregard them completely, but it's important to keep watching where these levels come in. Remember, banking crisis low, the market had to keep going down because more banks were failing. And of course, from that point, well, Bitcoin's pumped and the rest of the markets around the world have pumped. And I want to show you one that is going to hit a new all-time high after 34 years. I've never seen new all-time high prices. So in terms of the macro, we are really well and truly heading into this winner's curse phase for the real estate and economic cycle. This is going to be the bubbly time of the cycle. We look at where we currently are in this cycle, sort of somewhere around here now. I'll update this chart, so stay tuned to that on X. Link is in the video description. As for the bull market itself, a lot have been waiting for collapses like they saw in 2008. That's why I put this together so that we don't get fooled when we see any sort of corrections, hoping and waiting for some sort of 50 or 60% correction. We did not see any types of 50 or 60% corrections since 2008. So about 18 years now. There might be one to come, but it doesn't look like it's happening just yet, as the markets have accumulated and have just broken out into fresh highs, relatively speaking, looking back on the macro cycle here. So that is the S&P 500 still breaking to new fresh highs. And from a weekly point of view, the end of the week also closed at its second highest close in history. As for corrections on the S&P 500, we saw 0.5% on the week last week. Now, the entire correction from the top to the low, 2.57%. In last week's videos, we pointed out that when the market gets on these bull runs, sometimes these corrections aren't very deep at all, and it just keeps grinding higher and higher. And that sort of leaves the people on the sideline, the investors on the sideline, hoping and waiting for bigger corrections. That's what continues to fuel the bull market. People waiting, and they get desperate and they start to buy in at higher and higher prices. Maybe they see a 3% pullback instead of a 1% pullback, which it's done previously. They get excited and start to buy up on that 3% dip. And of course, that just continues to spur on these bull markets. It's happened throughout history. And in terms of the most recent cycle, up from 2009 to the peak we had in 2022, and now of course we've gone higher than that, there was very few times that the market did double-digit corrections. So what we can take from this is, as the market grinds higher, not to expect a double-digit correction when the market does correct. The single-digit corrections are far more likely. In terms of the speed of the market, how fast it's moving up compared to its previous moves, the S&P 500 is well and truly ahead of where it was back in 2023 when it moved from the banking crisis low to the July top. However, for the NASDAQ, same reference periods, the banking crisis low to the July peak, measured from the October low, basically from where it's pumped out of. Just copy and paste that, and it's come underneath that line now. So it is tracking just that little bit slower as we head into that, wherever the final peak is. In a couple more weeks, that would take us to the exact timing from that March low to the July top. We take our timing tool here, bottom to the top here of 18 weeks. Bottom to the top, 18 weeks is a couple more weeks away at the end of February. All this is signaling is that it could be rolling over, or at least, like we've talked about, some sort of short-term correction. Now, in terms of short-term corrections, looking at the seasonality here for the S&P 500, during election years, seasonality here is roughly a couple of a percent. So going into February, into March, there's your February top, and then pull back into March. It doesn't seem overly weak throughout this entire year. And as the year progresses, we'll get a better idea of just how strong or, in fact, weak the year is. At the moment, it's not showing signs of being an overly weak year. Of course, it's been pumping up. And so we're just paying attention to single-digit corrections for the S&P and for the NASDAQ. But what about the rest of the world? The rest of the world, for their stock markets, are hitting new all-time highs. Now, I don't put that lightly, in capital letters on the title. Everything bubble. Everything is in a bubble. I know there's a lot of talk about how unsustainable this is, but we bring up the quote often to remind ourselves that markets can remain irrational longer than you or I could remain solvent if, and in the brackets part would be, if you're trying to short these markets, just thinking that there's no way that they can keep going up. Take Japan as an example here. Everyone thought Japan would die out and it was the end. Sure, they've had to print money. They're doing their thing in their economy to get the economy going again. But their stock market is 1.2% away from a new all-time high. The previous all-time high was set back in December of 1989. Let that sink in. Probably 25% of you were born after 1989. You're from the 90s or even the 2000s. So this market has not seen a new all-time high from that point, but it looks like it is potentially going to do it, let's say this week. Let's hope to have it see a new all-time high for Japan this week. On top of that, India, which is a huge market around the world, emerging market, is at very close again to hitting a new fresh all-time high. It's been trading in all-time high territory. The European top 50 stocks has just pushed into a new fresh 23-year high, getting close to those previous highs of 2000. So that would take it to a 24-year high if you can get there this year. But again, that's fresh highs, higher lows, higher highs. Bubble is loading. This is a big bubble. What makes up the top 50? Well, of course, Germany's going to be in there. They're at new all-time highs. France is going to be in there. new all-time highs. The UK is going to be in there, pushing again last week, trying to get back to its fresh new all-time highs that it set in February of last year. So going back 12 months, it's about 4.5% away from new all-time highs. These markets are going crazy. Canada also had a massive week last week, pushing to fresh highs again since April of 22. So that's over 52-week highs. It's 4.5% away from a new all-time high. And as for Australia, which is trading right now, it is pushing into new fresh highs again. Just last week, it hit a few weeks ago, hit a new all-time high, and it's only a couple of points away from that again. The bubble is getting real, people, and it looks like we are heading into this peak here. This is the time to be making money, not being scared of the markets. That time will come later. As we can see from the cycle itself, almost every single time you see this rough 14 years up, 4 years down. We'll continue to follow up with it on the channel, but for now, it's time to get back to BTC and what's going on with Bitcoin, $52,500. This is obviously the resistance point that we've been following for weeks now. After it broke through the mid 40s here from the previous tops, it broke through 42,000, which was our 50% level. I'll do an update video on that on the channel as well. In previous cycles, Bitcoin had hit its 50% level and then come back to retest it throughout that cycle. Whereas this time it's broken its 50% level, which was at 42,200 and pushed even higher. Now, Michael has done a fantastic video on this. I'll leave a link to his channel down below, which you can check out after this, just going through the timing of this cycle and some of the unprecedented things that have popped up throughout this cycle, which have been different to last time. Now, I don't say those words lightly either, but it's important to understand the differences and how they relate to the cycle themselves. So here we are, 52,000. Next price targets above are psychological level, $60,000. It also lines up with the previous tops of the first peak in 2021. So a reasonable level there if Bitcoin can break through this 52K level. But if it's unable to do so, where are these downside targets? Now, if Bitcoin is to see a pause, consolidate the move, or a correction back to previous resistance levels, could give altcoins a chance to catch up, maybe even see those 33x pumps as opposed to 32x pumps yesterday or 31x pumps the day before. You guys that have followed understand the satire in that. In terms of the crypto fear and greed index, we're still seeing high levels of greed on the chart here. Note back to the previous cycle, we had high levels of extreme greed and that market sentiment wore off while the price continued up. So you started to get a divergence in how excited the market was about the move to the upside, which ultimately led to a significant pullback for BTC. Now, I don't think we're at this stage yet. We haven't really pumped up to extreme retail hype, but we have hit extreme greed and obviously sit in greed right now. So in terms of the correction, it might not be as severe because we don't have the same sort of market participants, all of that crazy retail back in the game yet. Now, the craziness doesn't stop there with Bitcoin. It has extended to Ethereum. We're seeing very significant moves on Ethereum right now, especially Ethereum versus Bitcoin. Now, before I get into this, quick shout out to channel sponsors here, SwiftX, and for you guys outside of Australia, Bybit and BitGet, check those out. But in terms of the Aussie US dollar, Aussie prices for Ethereum, 4,400, we have broken through the 50% level. Now, this is important to note because for the US price, it hasn't gone above that level yet. So if we were to get a resistance point here at the US dollar price, a little bit of a pullback, potentially we do see that pullback to on top of the 50% level for the AUD price. Now, we've got a few levels above here, roughly around 4,700 Aussie dollars, and then up around 5,400 Aussie dollars for Ethereum. As for BTC, we have hit 80,000 Aussie dollars. Pretty crazy to think that the price is only 13,000 away from this top now. So back to ETH USD for the rest of the world. Looking at the price here for Ethereum, 2,900 is that 50% level. Doesn't look like ETH is going to come back anywhere close to the previous all-time high, $1,500. Now, if this happens to be the top, we take our 50% level, looking at the top there, about 2,200 would be a reasonable pullback there to the 50%, top to that level, about 24%. And we know from Ethereum's pullbacks, top in April to the low here in October, was about 29%. So it's still within reason to see a healthy correction back to the 50%, maybe even a little further back to these previous tops and closing prices at roughly 1900. And it would still put it well within a reasonable correction at roughly 33%. Now, do I think that's going to happen? Probably not, considering the way the market has been progressing. And at this stage, it looks like ETH is really trying its hardest to push higher, maybe even get back to this top here at 3,600 before having some sort of pause, consolidation, or even some sort of reasonable correction here like it has done previously. This move is getting old. We're about 1, 2, 3, 4, 5 months in. Same deal for Bitcoin, about 5 months into this push to the upside, and the bars are getting even more extreme. Almost a $10,000 bar for Bitcoin in the month of February so far. Again, the month hasn't closed, so this could pull right back. And if we were to see the month pull back and close underneath the previous top, that would potentially show the weakness in Bitcoin, at least for the shorter term here, as the market continues to consolidate this move. Back to ETH, looking at the USD pairing here, it is obviously strong. Monthly is strong. Weekly is looking strong as it closed out above all the other previous tops and finds itself now at that critical 50% resistance level at 2,900 points. ETH BTC. It seems like we are at the low point relative to the previous cycle. Last video, we looked at the possibility of flipping Bitcoin to ETH. Maybe there's still a little time left to consolidate here. You might not get the exact low, which is absolutely okay. No one is trying to pick exact lows and exact tops. Your goal here as a trader is to pick a chunk of profits out of the middle. Be happy with that, move on to the next thing, and continue to do that over and over and over again. So from the top to the low here, 27 months. For ETH currently, it's a 25-month top to low. We're into our 26th month. So roughly speaking, it's coming out to a reasonable time frame. If this is in fact the low, you can see from the candle chart, you've got quite a lot of closes at the same price, and so far, ETH looks like it is trying to push higher again. We are really looking for 6.5 million Satoshis. 50% levels of roughly around 6.8 million Satoshis. So that's this number on the side here. You want to see this start to climb and close above these two levels, in particular, the 50% level above 6.8. Last cycle, it took Ethereum about 12 months. So if we turn these off and measure from the breakdown to the breakout in July 2020, you can see it was about 12 months there that Ethereum essentially remained underneath those levels, consolidated, and then used its strength in the market to push higher, come back and test those prices, and then away she went. Now, an interesting thing to note here, especially with the TIA Gann swing indicator, as I mentioned, link is in the top of the video description, 7-day free trial, emails every day to help you learn how to use this particular indicator. ETH BTC did not break down from the monthly swing chart. You can see here, as it put in the low, there was a higher low, another higher low, another higher low, another higher low, top was formed, you got a higher low here, and then eventually the breakdown occurred. So essentially what this tool helps you do is stay in with the trend no matter what the narrative is. What the narratives of the previous cycle were telling us is that Ethereum was deflationary when the next upgrade kicked in, going from proof of work to proof of stake, and prices were never going to go down. You have to buy now before it's all too late. Well, what do we know from that point? The price did fall, and well, ETH USD also did fall from that point, but it takes some time for it to catch up. ETH is deflationary. You can see here that the supply growth is negative per year. If it was to be proof of work, it would be very, very positive, but it is negative, and the charts are looking like the accumulation has taken place and we might be breaking to that next leg up. You're definitely seeing it against the US dollar value. You had your accumulation, reaccumulation, breakout, another short-term reaccumulation, and we're now testing those higher prices. So this pump is on. If Ethereum pumps, you can probably guess and bet that a lot of the ETH ecosystem coins would also have a bit of a pump as well. Stay safe in the market, use your trading plans. Hit the like and subscribe. I'll be back with another video showing you, well, more about this everything bubble that just continues on despite the calls for more recessions and potential collapses and corrections this year. Thanks again, guys. See you at the next one. Till then, take care and peace out.